Yesterday, I spoke on the floor about the need to restore revenue as part of our deficit reduction efforts. I explained that I've sent a letter to members of the Joint Select Committee now crafting a deficit reduction plan with 7 ideas on how to address our revenue shortfall in ways that reduce the deficit, protect economic growth, and ensure that the sacrifices which are necessary to achieve our budget goals are shared broadly among the American people. Together, these proposals would reduce deficits on the order of $1 trillion over 10 years. And today I want to go into greater detail on 2 of those ideas to address loopholes and tax breaks that are as damaging to our budget as they are unfair to working families. One proposal would stop corporations and individuals from using offshore tax gimmicks to dodge the taxes that they owe. The other proposal would close a loophole that gives corporations a huge tax break when they award stock options to their executives, effectively using the hard-earned tax dollars of American families to subsidize the paychecks of CEOs and other top executives. Now, let's begin with the goal here, deficit reduction. Budget experts tell us we cannot close our budget gap with spending cuts alone. Revenue must play a role. These 2 proposals can help. The Permanent Subcommittee on Investigations, which I chair, has estimated that the use of offshore tax havens by wealthy U.S. taxpayers costs our Treasury around $100 billion a year. I believe that legislation to address that issue can recover a significant portion of that loss. The Joint Committee on Taxation estimated that a previous version of the legislation would recover nearly $30 billion over 10 years, but new provisions that we have included should raise that figure significantly, and closing the stock option loophole would save $25 billion over 10 years, according to the Joint Committee on Taxation. This revenue would help the Joint Select Committee in its difficult task of achieving at least $1.2 trillion in deficit reduction, and it would help restore fairness to the tax code without penalizing activities that contribute to economic growth or raising taxes on middle-income America. Our work on the Permanent Subcommittee on Investigations has, for more than a decade, exposed the ugly truths of tax haven abuse. A single building in the Cayman Islands, called the Ugland House, serves as the mail drop for nearly 19,000 companies incorporated there for tax-dodging purposes. Of the 100 largest publicly traded corporations in America, 83 have subsidiaries in tax havens. Hedge funds, whose employees live right here in the United States, pretend to be based in tax havens to dodge U.S. taxes. An army of lawyers, bankers, and accountants help U.S. taxpayers use offshore abuses to avoid taxes. All of this shifts the tax burden of these tax dodgers onto the backs of honest taxpayers. Yesterday, the Internal Revenue Service announced that they have recently completed an offshore program where they give a degree of amnesty to people who are willing to come in and pay their taxes. 30,000 such people have come in since 2009. And, Mr. President, that is the tip of the iceberg, is our investigation at the Permanent Subcommittee on Investigations disclosed. Now, how do we combat this? Several colleagues and I have introduced legislation called the Stop Tax Haven Abuse Act, Senate Bill 1346. Our bill will authorize the Treasury Secretary to take special measures against foreign jurisdictions or foreign financial institutions that impede U.S. tax enforcement by prohibiting U.S. financial institutions from doing business with those foreign financial institutions in uncooperative jurisdictions. It will help the IRS identify ownership and control of offshore entities. It would stop corporations whose management and control are located primarily in the United States from claiming foreign status to dodge taxes. It would prevent businesses from dodging taxes by claiming that assets physically held in the United States should be treated as offshore assets for tax purposes. And it would treat derivatives payments sent from the United States to offshore entities as taxable income. Enacting this legislation and ending these offshore abuses would penalize tax dodging, not legitimate economic activity, and it will help to bring down the deficit. Similarly, closing the stock option loophole would not penalize productive economic activity. It would instead end an unaffordable federal subsidy for corporate executive pay. Today, under tax rules for reporting stock options, corporations report stock option expenses on their books when those stock options are granted. But they use another method to claim a different and a usually much higher expense on their tax returns when the stock options are exercised. Now, the result is that corporations can usually claim far larger tax deductions for stock options paid on their tax returns than the actual expense that they show on their books for those same options. They get a much bigger tax deduction for exactly the same tax option expense as they show on their books. Stock options are the only type of compensation for which the tax code allows a corporation to deduct as an expense for tax purposes more than what they show on their books for that same expense. IRS data shows that from 2005 to 2009, this loophole allowed companies to claim between $11 billion and $52 billion each year in excess tax deductions. Now, legislation that I've introduced with Senator Sherrod Brown and Senator McCaskill would end these excess deductions by requiring corporate stock option tax deductions to equal the stock option expense shown on the corporate books for those same options. It would not affect the taxes paid by individuals who receive the stock options. Their taxes would not be affected. As of now, they pay for the actual sales price minus their cost. It would not affect so-called incentive stock options, often used by startup companies. And it would make stock option pay subject to the same $1 million cap on corporate tax deductions that applies to other forms of executive pay. Now, these proposals, Mr. President, will alone put a major dent in the deficit. They would ensure that multinational corporations and wealthy individuals pay the taxes that they owe, just like working Americans. If we're to seriously reduce the deficit, these kind of tax reforms and the resulting added tax revenues must be part of the discussion. And I urge my colleagues, especially those on the Joint Select Committee, to embrace these ideas. Again, I sent a letter yesterday to the members of the Joint Committee, all the members, laying out these 7 ideas, which together will raise over $1 trillion in 10 years. And I'm going to return to the floor again in the days ahead to discuss additional reforms with the resulting revenues that were set out in my letter to the Joint Select Committee. These changes, these reforms, this loophole closing will help to close the gap between spending and revenues that all of us, I know, want to close.